Welcome back, guys. Today, I'll be discussing four stocks that have given a breakout by the close of the week and could continue the upward momentum in the short term. Make sure you watch the analysis on all so that you don't miss a good money-making opportunity. I also have a bonus stock for you today. Before we dive in, remember these stocks are best suited for short-term swing trades, mainly driven by technical charts with just a touch of fundamentals for added context. This isn't investment advice. Let's dive straight into the technical chart of the first company on our list using the daily time frame. This stock made a recent high of $49 back on June 27th, 2024. Since then, it faced consistent rejections from a clearly defined trend line, keeping it locked in a prolonged downtrend. However, everything changed on January 6, 2025, when the stock finally broke out of this trend line after a long 6 months. The stock shows strong momentum, but as always, it's wise to track whether the breakout sustains with a successful retest. To avoid getting caught in a potential false breakout, you can observe how it behaves near the breakout level. As I always say, there are more fakeouts than breakouts, but within these patterns lies the opportunity to make money. Looking ahead, there's a resistance level at $22.50, where another downtrend seems to be forming. Should the stock manage to breach this level, the next resistance lies at $28, which is about a 25% potential move from the current price. Importantly, the stock is currently trading above its 50-day exponential moving average, but remains below the 200-day EMA, signaling improving short-term momentum, but still some room to grow for the long-term trend. Now let's take a quick look at the company itself. This is a small-cap firm in the industrial sector with a market capitalization of $760 million. It operates in the environmental services industry, offering air measurement and environmental laboratory services. All right, the name of this stock is Montrose Environmental Group with the ticker MEG. Now let's move to the second stock and dive into its technical chart, again on the daily time frame. This stock reached a recent high of $42 on February 16th, 2024. Since then, it faced repeated rejections from a visible trend line, staying locked in a prolonged downtrend for nearly 10 months. But the game changed on January 8th, 2025, when it finally broke out of this downtrend. What's notable here is that the stock faced 4 strong rejections from the downward trend line before this breakout. This type of persistent pressure often makes a breakout all the more significant. Remember, I'm just sharing what the chart is showing us. The first key resistance lies at $18.50. And if the stock manages to cross this level, the next resistance is at $25, offering a potential upside of about 38% from the current price. Interestingly, the stock gained upward momentum from $13, which also marks its all-time low and serves as a strong historical support level. This adds a layer of confirmation to the breakout. Like the previous stock, this one is also above its 50-day EMA but below the 200-day EMA, indicating short-term positivity but some room for long-term improvement. Now about the company. This is a small-cap firm in the healthcare sector with a market capitalization of $1.5 billion. The company specializes in fertility benefits management, offering solutions like in vitro fertilization, IVF, egg freezing, and other fertility treatments. Financially, the company has generated revenues of $1.1 billion with a net profit of $57 million, leading to a profit margin of 5%. The earnings per share stand at 58 cents with a price-to-earnings ratio of 32 times. Before I reveal the name of the company, may I humbly request you all to engage with the video by liking, commenting, and subscribing to the channel. Every week, I share at least 3 videos showcasing stocks at key levels. Your engagement not only boosts the channel's reach, but also inspires me to keep going. The name of this stock is Progyny Inc. with the ticker PGNY. All right, now let's dive into the technical chart of the third company on the list today using the daily time frame. This stock reached a recent high of $181 on July 17th, 2024. However, it faced consistent rejections from a clearly defined trend line, staying locked in a prolonged downtrend for about 5 months. On January 6, 2025, it finally broke free, delivering a strong breakout. Looking ahead, the next significant resistance is at $134, which is roughly 7% from the current market price. This level will be critical to watch as the stock builds upward momentum. For moving averages, the stock is trading above its 50-day EMA, signaling strength in the short term, but it remains below the 200-day EMA, which suggests there's still some catching up to do for the long-term trend. Let's take a brief look at the company itself. This is a large-cap firm in the energy sector with a market capitalization of $7 billion. The company is involved in the exploration and production of crude oil, natural gas, and natural gas liquids, primarily within the United States. On the financial front, the company generated revenues of $4 billion MON with a net income of $936 million, resulting in a profit margin of 20%. Its earnings per share stand at $19.41, and the price-to-earnings ratio is 6 times. Notably, this company offers a dividend yield of 8%, making it attractive for income-focused investors. And the name of this stock is Chord Energy Corp, with the ticker CHRD. Now, let's move on to the fourth and final company on the list, starting with its technical chart on the daily time frame. This stock made a recent high of $23 on August 25th, 2024. Like the others, it faced repeated rejections from a visible trend line, staying locked in a prolonged downtrend for about 4.5 months. On January 6th, 2025, it broke through this trend line, delivering a strong breakout. The stock is showing immediate resistance at $16.50, and if it manages to cross this level, the next target could be at $17. It's trading above the 50-day EMA, but remains below the 200-day EMA, which is typical during the early stages of recovery from a downtrend. Let's look briefly at the company itself. This is a mid-cap firm in the healthcare sector with a market capitalization of $4 billion. The company operates globally, focusing on pharmaceutical solutions, including women's health, biosimilars, and established brand medications. Financially, the company generated revenues of $6 billion, with a net income of $1.3 billion, resulting in an impressive profit margin of 20%. Its earnings per share stand at $5.04, and the price-to-earnings ratio is 3 times. Notably, it offers a dividend yield of 7%, which adds further value for shareholders. And the name of this stock is Organon Co, with the ticker OGN. All right, guys, here's a bonus setup I wanted to share with you. Take a look at the pattern on your screen. Notice how this stock has been riding a consistent wave. It makes a move up, pulls back, then climbs again, repeating this pattern 3 times already. Now here's the exciting part. It has just broken out of its downward trend for the 4th time. If history is any indicator, we might see another wave forming. Let me walk you through the previous moves. The first breakout rallied 25%, the second one climbed 27%, and the third surged 30%. Now, with this new breakout, it could be setting up for a similar move. Here's the kicker. The downside risk is limited. The stop loss is at $77, while the current market price is around $80. That's a tight stop with a potential target of $110, giving you a solid risk-to-reward ratio. So, if this setup aligns with your trading strategy, it might be worth keeping on your radar. The name of the stock is Stanley Black and Decker, with the ticker symbol SWK. All right then, that wraps up today's stock picks. I hope these insights were valuable to you. Please interact with the video by liking and commenting. It helps grow the channel a lot. Until next time, take care, and I'll see you in the next one.